first, let's send it over to Chief Economic Correspondent Steve Liesman for more on Powell's message to the markets. Steve, did Powell give in?
Some people are characterizing it that way. I'd say he kind of redirected from a legal standpoint, perhaps. But what he did for sure was ignite a powerful market rally, saying the Fed is not on a preset course. Market wanted to hear that, and that the Fed is, quote, just below the range of neutral estimates.
Interest rates are still low by historical standards, and they remain just below the range of estimates of that level that would be neutral for the economy. That is neither speeding up nor slowing down growth.
Let's unpack that a little bit. Pantheon, Ian Shepperson at Pantheon says, quote, it's not as dovish as markets think. So the top of the target range is only one hike away from the bottom end of the range, but it remains 3 hikes from the middle and 5 from the top. So he could mean anything along those lines there. Powell also affirmed the Fed's plans to gradually raise rates. Stocks shot up, bond yields and the dollar shot down. But here's what happened in the Fed funds futures market. Actually, a rise in the percentage chance or the probability of a rate hike in December, and then a little bit lower for June, which is where the first hike for 2019 is priced in. And the market is very pessimistic about even a second hike by October 2019. Here's the big test. Whether the Fed outlook has really changed will come in about 3 weeks. That's when we'll see whether Fed officials have changed their forecast from an average now of 3 hikes in 2019 to something lower for next year. And Melissa, you may have a question for me, but I've got one for you and your traders there. Here's my question, whether or not...
Turn the tables there.
I'm turning the tables on you. Do these guys want to see less growth and fewer Fed rate hikes, or they would prefer to have more growth and more Fed rate hikes? And I know what the wise answer is, the wise-ass answer, if I can say that on television.
The wise-ass answer.
The wise, which is we want high growth and no rate hikes. But I'm telling you, that's not an option. You're not going to have that option.
I would posit that what the markets were doing in the month of October was anticipating what came about in the data, which caused Powell to directionally change the message to the markets today. And so the markets already saw that there were signs that they, in the cards, that growth may not be as strong as before. And that's what happened in the month of October.
And under that theory, what the market was really afraid about was that the Fed was going to make a mistake, that it was on this hell-bent,
that the growth was slowing already.
We're going to hike or not. That's 2 curses in a single hit. I don't know. I usually don't do any. But anyway.
Potty mouth.
But that it was hell-bent on raising rates no matter what happened. And I think one of the things that Powell convinced markets of today is that is not the case. There's a certain optionality to it.
Why do you think economists are so hell-bent on positing that what Powell said today is really not much different from what he said in October?
Because economists did not misunderstand him when he said back in October that we're a long way from neutral. Because when he said long way, the only way that a day-to-day Fed observer could hear that is saying, well, he thinks we're like 100 basis points away, which was sort of what we all thought back then. So some people heard long way and they freaked out. They said, what does that mean? 200 basis points, 150? No, we always knew that the Fed, most of the folks on the Fed thought neutral was around 3. We were between 2 and 2.25. So yeah, we were kind of a long way from neutral if you look at it that way. But I don't think that was a major change in policy at that point.
Okay. Steve, thanks. Steve Liesman. So did the Fed just give Wall Street the all-clear sign? Is it safe to buy again? And do you think what Powell said today is very different from what he said in October?
Like 3 questions.
A lot of questions, Guy.
There are
I don't know if you can remember all that.
Because we were having this discussion with Steve, and the economists out there are still saying, you know what he said today wasn't all that different from what he said in October. The markets are taking it in a very different way, though.
Became more pragmatic today. And last night we started the show. Pete said that he saw short-term buying in the S&Ps. Tim was talking about how in the shorter term, the S&P was vastly oversold to the downside, was due for a bounce.
And I was having dinner.
You were having dinner. Hopefully you enjoyed it.
I did. It was great. I love watching.
Place.
Good job.
And we also talked about, now, I thought the market would rally, but I thought the market would rally on the back of President Xi and President Trump having some handshake, my best friend. We have a path going forward. I didn't think it would rally on the back of the Fed. So what does it mean now? Well, now it's interesting. I think this gives President Trump a couple more cards to play this weekend, right? The market's rallied now. He can take a more hawkish stance now with the Chinese as opposed to a couple days ago when the market was sort of reeling. So this could actually be bad for this weekend's meeting.
That gets to the criticism that Trump made to the Washington Post yesterday, which we were all sort of wringing our hands over, right? And that is that he's trying to make deals and the Fed is not being accommodating. And here we are, all of a sudden. Jerome Powell is more accommodating.
Did we get a tweet today? October 3rd. I mean, October 3rd was when the market sold off, right? So it was a long way from neutral, now just below neutral. That's all you need to know. Granted, trade's going to be a headwind, but this was about the Fed, the sell-off. So we're halfway there.
I think you could make an argument, though, that the Fed has downgraded the economy. I mean, in other words, what's neutral in an environment where you've got fiscal runoff next year, you've got the QE stepping back from QE.
Didn't the markets already downgrade the economy with the move lower? I mean, wasn't that in effect what was happening? No?
Okay, yes. Do I think markets are pricing in slower growth? And I would go back to Steve Liesman's question that Guy didn't even answer.
But he didn't ask me.
That's true.
Well, I took it upon myself to answer.
But the answer to that question is we would rather see more growth and more Fed. Because that's really ultimately where we'd rather be. As I'd like to say, a growth scare is a lot worse for markets than an inflation scare. And I think the Fed stepping back ultimately isn't a great thing. But yes, Powell needed to reiterate that the Fed is going to be data dependent. And yes, I do think there was plenty of room for him to step back today.
As a good rate hike. I think the markets want lower rates. Unfortunately, I think that with growth, people do the calculus. The rates move higher, risk on equities move lower.
Well, it is. We're still at historical low levels in terms of rates, and that's something Powell pointed out. But he also said, look, we are going to be data dependent. Don't just sit there and say we are going to be hiking this many times. And I think he said enough things today that I think people really just said, you know what, we can get our arms around this.
He also said the economy was good.
Good. Not overheating, but good, right? So I think that everybody read into that what they did, and that's why we saw the market react the way it did. By the way, unbelievable paper in the last couple of days in terms of everything being so short-term, Mel, either expiring Friday or going out maybe one more week. But, you know, you talked about the spiders. We had SMH, we had Microsoft, we had Intel, we had all kinds of monstrous buys, the industrials ETF, XLI. Everything very aggressive, everything very, very short. And we did not have volume for 3 days in a row until today.
So rates stay lower for longer, maybe? Or at least there's the possibility at this point. What do you buy? I mean, what do you buy? Theoretically, right? Those growth stocks, which were not looking so good in the face of higher interest rates, they're looking better now, aren't they?
Yeah, I guess. But, I mean, the Fed didn't cause the Fed didn't make Facebook go down 30-something percent.
Facebook is a little idiosyncratic.
Okay, the Fed didn't make Google go down the extent that Google didn't make Amazon sell off the amount, didn't make Nvidia get cut in half. So you can blame the Fed for a lot of things.
I think that was the growth value. I think that was the growth value scare or rotation. I think that was the essence of the sell-off led by the Fed.
Well,
what's interesting, though, is we're not talking about trade today. And is the question, is the Fed more important than trade?
Yes.
And I would argue that they are. And I would argue that the biggest shocks we've had for this market all year have really been with the Fed as a backdrop. Yes, trade indicates that we could have slower growth and we have global headwinds, but the Fed to me is significantly more important. And
I disagree. And the reason I say that is if you look at volatility, even though we're up 600 plus points, volatility, the index itself held in there amazingly solid, right? I mean, here we are trading the way we were. If indeed people are saying this is it, I think trade is bigger. Quite frankly.
But Fed caused the sell-off October 3rd, those comments,
and
that's
there
where we
is
fell
no
off
doubt,
the cliff.
Steve. I don't disagree with you on that. I think from October 3rd to here. But let's also be honest about the idea that we didn't have clarity, and the clarity we didn't get in the earnings cycle all really stemmed from trade. That wasn't about the Fed. That was more about trade, and that's still in front of us. That's why I think this G20 and why all this short-term paper, perfect timing for the short-term paper, right? You've got Powell today. You got the G20 coming up.
And you got the actual Fed meeting also next week.
Absolutely.
So
You've got all of that.
This is a really interesting setup in terms of that paper that's only out for 1 week.
December 7th expiring, December 14th expiring. That's really short.
Become a sell the news event. I mean, are we setting up such that Trump may have cover for no deal with China? We have the FOMC, which confirms Powell's views today. And then what do you have?
Right.
Do you sustain these gains?
Well, then it all comes down to what happens at the G20, in my mind. We're looking at the G20 and obviously the Fed. I think we've got a pretty good sense. I don't know about the rest of the desk. I think we all agree. But I assume we're going to get a hike, right? I think we're going to get a quarter
December.
point in front of us right now.
Right.
And then after that, then it's all up in the air. I think Powell then goes.
Speech that he gave today.
Right. Back to the data dependent and all the rest of the words that the normal Fed would give out.
Quickly, though, hidden in the Fed, not hidden, I mean, he being Powell, pointed out a number of risks for the market that had nothing to do with the Federal Reserve, not least of which, and we talked about high yield and corporate debt the other night, and we also talked about, all we talk about is trade. So he pointed out the asymmetric risks in the market.
Although he said they weren't systemic risks.
No.
And I think, that's important. I think this is a speech that the Fed chairman gives where I think he has to be talking about certain components of the broader economy. So I just think that the market wanted to hear something today, and I do think that the Fed has adjusted their tone. There's no question, because, again, you had this earlier in the week with Clarida. You had some comments even a week and a half ago, which were a Fed that seemed to have gone more neutral.
But when you're asking when you guys were asking have we gotten a tweet today, because it would have been a victory lap, right?
I'm surprised we didn't.
It would have been a victory lap for Trump.
Surprised we
It wouldn't have been surprising if he did.
Yeah.
Well, he hasn't done anything different, just to button up. He hasn't done anything different. He's just come out softer along with what he was doing.
Well,
so I mean, that's
600
you could
points
say,
on the Dow.
you could say it's a win, but I don't know if it's a win.